Well, good afternoon, everybody, and welcome back to the Energy Updates Weekly for the week ending 10/23/2022. I haven't made a video in the past few weeks, so I thought today I'd make a video and let's look at what's happened with the oil prices and stocks and those types of things. You've probably all seen a big increase in what you're paying at the pump, so let's take a look at the numbers and see what we can find out. So we start here again at oilprice.com. The WTI West Texas Intermediate crude is the benchmark crude in the U.S. for prices, and it is currently $85.05 per barrel. It's seen large fluctuations. If you look at the graph over here, just this from the end of September till now, it has risen from 80 to over 90, back down to mid 80s, up to where it is now at 85. And it's just bounced all over, and so big upswings resulting in big upswings in the price that you're paying at the pump. Probably not going to have any relief in this in the near future. Okay, over to look at the total number of rigs drilling in the U.S. And I've been talking about the last time I did a video, which was probably back on this end of September, that typically in the fourth quarter, it's not uncommon to see a rise in the number of rigs running. And that is because a lot of the companies have budgeted from the beginning of the year. They may be holding back a little, not sure how the budgeting is going to go through the year. And by the time they get to the fourth quarter, they know exactly what needs to be expended for the rest of the year. And so that usually translates into an uptick of rig activity. And we have seen that again this year. So an initial fall in the first week of October, but now it's picked up, and 771 rigs running in the U.S., where at this time last month there were 765. And I would expect this to maybe even continue to rise and at least hold out at these numbers until the end of the year. We'll just watch and see how that works. So significant increase, 771 last week. A year ago, 542. So that's a good increase in the number of rigs out there working. Looking at the petroleum balance sheet, the stocks for crude, 842.5 million barrels. And of course, that includes the Strategic Petroleum Reserve, which is at a little over 400 million barrels. And this is a continued concern. Okay, let me try to highlight that line right there. And this is something we all should be concerned about, because the Strategic Petroleum Reserve stands for just that. It is a strategic reserve, and it was set up and should be for military action, for emergencies in this country where we have a store of petroleum that we can tap into and utilize. It's not to be opened and drained as a normal course of business, but that is exactly what has been happening. If you look at the last column on this, last year there was 615.3 million barrels in the Strategic Petroleum Reserves. Right now, last week, 405 million barrels. So that we have lost 210 million barrels over the past year that is just being pulled out and added into the normal stream of crude oil supply. And that is a travesty. That should not be. So that is mismanagement. And the people who are doing this should be held responsible. So I'd say jump on your senators and your representatives and start demanding questions on what's the strategic need right now for pulling and draining oil out of our reserve. Okay, so that's my little rant for the week. Okay, so you can look through these numbers. Everything stays pretty consistent. You know, the ethanol is pretty close to 22 million barrels. Kerojets steady in the 37 million barrels per day. You know, 106 million barrels of distillate or fuel oil. Most of that, again, is for the 15 ppm sulfur and under, which is highway diesel. Then the higher stuff is the agricultural diesel. And so things are, you look through here, pretty consistent. You know, small changes, 2, 4, 5% a week, but that's going to fluctuate up and down as current response to markets and things like that occur. Okay, production, good news. The week ending 10/14, 12 million barrels a day production from the U.S., which is fantastic. And we are pretty much at the limit of what we can do with current pipelines situation, and of course, you know, if we could build additional pipelines, we can move additional oil and cut down on what comes in, okay, from other countries. So 12 million a day, and that's remaining very little unchanged. So that number is hovering between the high 11.8 million and 12 million barrels a day, which again is good. Crude oil input to refineries is hovering around 15.5 million barrels a day through the past several months, up and down a little bit, looking at in that 93 to 96% utilization in refining capacity. And again, that's not unnormal, and these numbers are tracking pretty consistent for right now. What is not consistent is that even though we do not see the numbers go down, the production is the same, the throughput of refineries is about the same, the utilization of refineries is about the same, the stocks of all the different types of products are about the same, but we're seeing huge fluctuations at the pump. So 3 weeks ago, I filled my diesel tank at a station in Rapid City, $4.54 a gallon. That same station now, 3 weeks later, is $5.29 a gallon, 75 cents higher in 3 weeks. And that's consistent all around town for the diesel. Okay, so again, you know, we all need to be looking into why these things are fluctuating so much and where the root causes of these things are, and get involved with writing your senators, writing your congressmen, you know, demanding some action and some straightforward answers, not just a bunch of you know, misguided types of opinions that we seem to get a lot of these days. Okay, so 20.7 million barrels of finished products over the last week. Again, you can see through here, pretty consistent. 19, here's 21, here's 20. So all of this is running through about 20 million barrels a day. Average is pretty standard for what we are experiencing. But here we go for the winter. This is from EIA. Households primarily heating with heating oil or propane will likely pay more this winter, and so up, slightly up, a little bit up. Everybody's up. So if you have heating oil or propane, and you know, if you're using natural gas, you're going to pay more too. So everybody's going to be paying more. That's just the way it's going to be this year. So if you want more information, you can go to EIA Winter Fuels Outlook is right down here. You can click on that and get all the latest information on what they're saying is going to happen this year. Okay, so in some cases 27% more. So who's had a 27% raise last year? Okay, well, you're going to lose 27% with fuel bill this year, and you're paying more for your car gas and diesel as well. So nothing but good news, right? That's just the times we live in, and that's what's going on. So you know, I hope your gas tank is full. Remember, fill in the coolest temperatures of the day, fill slow, and fill often. In other words, keep your tank at half and above. All of that will translate into better mileage for your vehicles. All right, so thank you for watching. I hope you enjoy this. Share with your friends. Give this channel a thumbs up if you like it. We'll see you later, or we'll see you when there's big news changed in the petroleum industry. Thanks for watching. See ya.